Hello guys, welcome to today's stream. So we do want to be talking about a few different things here. We will mention Solana very briefly and then also get into what is going on in Lebanon, why they're just closing down banks, and what I think the solution might be, and why we might see Binance Coin pump BNB. Hello, hello, hello. Also, guys, just going to quickly start off. Make sure that if you haven't already, that you follow us on or subscribe to the channel over here on YouTube. Hit the bell notification, and then you will be very much up to date on everything that's going on. AJ, how are you doing today? You okay? This is how
Yeah,
we should start the day. I should say, just bringing up the price of everything.
yeah. After yesterday, the markets had a pretty bearish reaction to that Fed rate hike. But of this morning, we are having a little bounce towards the upside. But the question is this going to just be a sort of a smaller pump before the next leg down? We will see.
Yeah, and that is it. You can see on. You obviously will go through and do some proper technical analysis. This is not technical analysis, but you can see obviously we did. Pretty much all coins had that massive sell off there yesterday. Obviously, apart from the stables. So it's something. It massively hit the market. Me and AJ were just mentioning about why this had happened, and what the Fed are now planning to do. So I did document it in a video released this morning, actually. So if you haven't already, make sure that you go and watch that video. I basically outline, I go through something extremely boring, and it's all about this, it, it's rubbish. It's very informative, but I've done the research so you don't have to. But it very much helps us understand exactly what we can expect for the rest of the year and also next year. So there is a pumping coming. Watch the video to find out exactly when. But I'm just going to quickly jump into a little bit of news here that we have. So Helium community has voted to migrate to Solana, which is pretty cool. Obviously, very good for the Solana blockchain. On this news, we have seen a bit of a pump, but not really. So there was a vote, and 81% of people were in support of the plan, which is to move the majority of Helium's community, move to wireless network. AJ, help me here. So an overwhelming majority of Helium's community has voted to migrate the wireless network. Helium is a wireless network to Solana, and this is because basically what they want to do is provide. Where is it? Yes, here. So to provide a 5G wireless service called Helium Mobile, in which they partner with T-Mobile, which is pretty cool. Obviously, this might have a very well once it gets adopted. This could have a massive impact on the Helium coin. So that's something that you should watch and will be released in the first quarter of 2023. And obviously, they can monetize this, which is pretty good. Which then obviously they can use to pay for pretty much anything, extra research, development, etc., etc. But now I want to move on to possibly one of the biggest use cases, one of the biggest advocates for cryptocurrency. AJ, I'm not sure if you've heard this, but basically, Lebanon has closed down all of their banks, just closed them down. They say until further notice. But when, like, you can't just close all your banks. It seems insane, especially from us, people who are from a Western country, for example. Just, if imagine if your bank just said, we're closed, sorry. What are you going to do?
Does that mean they
And
can't withdraw money or spend money
yes,
anymore?
that's
Okay.
it. Yeah. So, and the reason why they did this was because there was beginning to be a run on the banks, and basically a run on the banks is when everyone's like, right, let's get our money out, and then that just caused a bit of a like, oh, wait, if you're getting all your money out, maybe I should. And as we know, banks don't actually hold enough cash for us to be able to like withdraw and get all our money. But anyway, so now we're seeing a lot of people in Lebanon actually move towards crypto and this decentralized, should we say, financial ecosystem, because the centralized one is just closed. It's absolutely insane. So this is again like another example of where crypto can step in when there are issues with centralized financial services. And to be honest, we're beginning to see this more and more. Obviously, we had El Salvador. We now have Lebanon. I will say they're slightly different. Lebanon is not making Bitcoin a legal tender, but what I wanted, I'll save this story for afterwards. But I wanted to talk about Binance Coin because I saw in a what was it? An interview, and I'm not sure if you've seen this, AJ, but there was an interview with CZ, the founder of Binance,
Yeah.
and what he had said was that in terms of media exchange, like I think it was the amount of cash transacted and the volumes currently the most voluminous transactions is not in dollars in Argentina, it's actually in Binance token, which is pretty crazy because you can do a peer-to-peer, exchanging money. Like if I want to send you money, AJ, I can just do it on Binance with zero fees. And so that
Yeah,
he said that that was the biggest, like, volume of exchange, which is pretty crazy.
yeah, that's very true because I think you do it as well. But personally, for me, I do a lot of um, transfers over the BNB Smart Chain because of their
Yeah.
almost next to nothing fees. So
Yeah,
I am
exactly.
not
And
surprised.
so yeah, it is crazy, and so this is another element where we're seeing the Binance Smart Chain really like step up its game and get very heavily involved in this, currency transaction.
Yeah,
And then also I wanted to mention this emergence of BNB as a global DeFi infrastructure. So there's just an awful lot of ways in which Binance is kind of stepping and providing a real genuine solution to a genuine problem. And I know this is not exactly how they started out. It wasn't the initial plan, but they've really stepped up their game and kind of been able to offer a really good service. And there's not much here to kind of back that up. But I just wanted to mention that. And I'm going to just finish up here. US futures waver as inflation battle intensifies. Like I said, guys, did go through exactly what made or what caused this massive drop in the markets, and it's not just because we had a 75 basis point hike. There's much more to it, and so I did go through in my video previously. But yeah, just the key things to kind of note here. So Fed impact surge in hawkish bets for the Fed has dragged EM currencies down. And the EM is emerging markets. But we're seeing this hawkish, which is always a bad. There's dovish and hawkish from the Fed. Dovish, like everyone likes doves. Hawkish, people don't really like hawks; they're scary. So we're kind of seeing this have an effect, and we did see the dollar move to the downside. And also, just a little bit of news from your country, AJ, Bank of England, they have a half point hike. So we are seeing that, pretty much across the world, everyone's getting, quite tough on inflation, but we're just not there yet. And inflation is currently getting out of control. So it doesn't look good in terms of a long-term, should we say, journey of actually getting any pump anytime soon.
yeah.
Just lots of fear.
Yeah, and if if we continue this as well, the technicals are lining up with the fundamentals as well. We've got these bearish price targets on the charts as well for Ethereum, for Bitcoin, and the fundamentals are also lining up with those technicals as well. So it's always good when you see both of them lining up because it sort of confirms the technicals and it also sort of confirms the fundamentals as well. I know that the
Yeah.
fundamentals do drive it a lot, but also the technicals are a very big part of it as well.
Oh, absolutely. Yeah. And that's it. The technicals are. Do you want to bring them up? We can have a look through. We
Yeah,
can have a look through what it is that we're actually looking at, and what are we? Because obviously, with the fundamentals, they're a bit of a slow burner, and they don't really indicate, any way or any time, should we say, to enter into a trade. But what are we looking at here for the technicals?
yeah. So starting off with traditional markets, I know we're here for the crypto market, but we know that the crypto market does follow the traditional market very, very well. And what we have actually seen on the S&P 500 is that we have now broken that daily support level. As you can see right here, we've got that break towards the downside, and we've had that reaction as well. And now there is a possibility that we could come down to these previous lows back here at approximately the $3,670 level. If we do come all the way back here as well, it has acted as some support back here as well after that break towards the upside. So this is sort of the next major level that we are looking at the price potentially coming down to, because we have had this break here. Now, we spoke about this a lot on this channel. This scenario here is looking very, very similar to, where are we? Looking very similar to this scenario here. Rejection back in 2008, rejection from the 200 MA down to the support, break of the support, and then we have that major crash in the market. We're seeing that right now. We've had that rejection from the 200 MA. We broke this major support level here, which, as you can see, has been major resistance and support previously. Looking back in 2008, as you can see, it's been major resistance and support as well, almost looking exactly the same. And then we got that break towards the downside of that, which you can see happened right here. And then we got that major move towards the downside. So the difference this time is that we came up and actually retested that previous support as resistance again, and got that confirmed rejection. Now, for me, that just confirms this level even more and strengthens the possibility that we could see the price come down even further. And then we've come down to this sort of shorter term daily support level. As you can see, it's been support here, it's been resistance here, support, and we've tested it here and actually got the break towards the downside. Now, we can say that we got the break towards the downside during this candle. It was only a very small break. Then we got a retest, and now we have a confirmed rejection from it. So looking at this, it's not looking too good. And as I said, there is the possibility we could come down to the $3,670 level approximately. And then if we lose that, I would expect to see much lower prices. That is sort of the next major level. And then a break below that, I think we would see much lower prices and potentially a similar crash to the one that we saw in 2008. Because as I've said, it's looking very almost identical to the 2008 crash, this run up to this. So technical side of things, it's not looking good. And even the fundamental side of things, with the US not having inflation under control as of yet, it looks like we could see the price come down even further as well. So this is just proof of where the fundamentals and the technicals come together, and they're showing us a pretty strong scenario of where we think the price is going to go, and the likelihood of
Yeah.
it is going to go down.
Yeah, you're right, and I think we had that little retest, of this support, which then consequently we dropped down from. That's almost worse than what happened in
Yeah,
2008, because it's
exactly.
it was unknown territory in 2008. Everything was just falling, but now we've
Yeah.
confirmed that we have this massive. We've dropped down, we've come back up, we've retested it, and we got pushed down.
Yeah.
So yeah, it will be interesting to see this. Was it 3,670 odd
Yeah.
level, to see how we react? But the trend is not lying,
No.
unfortunately.
It's not at all. And obviously, we're going to see this feed into the crypto market as well. But also another indicator of that, well, can predict where the markets are going to go, traditional market and the crypto market, is the DXY. As you said, we have had the little push towards the downside of the DXY. And we did come very close to that target, which I did give you. I said if we stayed above this support level here, then the likelihood of it is that we would come up to approximately 112. We came very close to that. We came up to 111.8. We didn't quite make that target as of yet. There is still that possibility that we could. But if we do continue to see the DXY push, then we are most likely going to see traditional markets and the crypto market fall as well. We know this. We know that the DXY has been in a massive uptrend over the course of this year, and also we know that Bitcoin has been in a massive downtrend over the course of this year as well. That just proves that when the DXY goes up, Bitcoin goes down. We see it on the shorter time frames as well. But taking a look actually at Bitcoin on the shorter time, looking at the 8 hour, we are finding some slight support. That's why we're getting this bounce here. Slight support at $18,450. As you can see, there's a wick touch here, candle touch here, and another touch here, getting that bounce towards the upside. So The question is where is the price going to go next? Now, looking at the daily doesn't actually look too good because we've broken this major support level that I've been talking about for a while now. As you can see, lots and lots of support. We have actually got that confirmed break towards the downside. However, we are having a little push towards the upside today. So there is a possibility maybe this is a retest. Then we could get a rejection like we saw on the S&P. We've got the slight break towards the downside, maybe get that small retest, and then we see the price continue towards the downside. That could be what we are potentially going to see. But for me, I'm not going to act on anything yet. I am going to wait for this weekly to potentially break towards the downside. As we know, this weekly is the previous high from all the way back in 2017. It's acted as major support back in June of 2022. And right now we are testing this level, this $19,000 level. For me, if we break this, pretty quick move down to 12,000, that is what I would expect to see, because as you can see, there's no support between this area. When we break a major level, we go to the next major level, as you can see here as well. We bounce off a major level, go to the next major level, a rejection from the major level, down to the next major level, bounce off the major level, up straight up to the next major level, and it carries on. The trend carries on. So I would expect a break. If we were to get a break towards the downside, I would expect the price to come down to 12,000. We also do have this bearish flag, which is giving us that $12,000 target. So taking from the flagpole up here to the bottom of the pole, and if we drag that to the breakout point, which is here, that does actually give us a price target of 12,000. To be exact, it's around $11,800. So pretty much 12,000. And yeah, the likelihood of it is 12,000 is looking pretty probable at the moment, because of what the fundamentals are telling us and because of what the technicals are telling us. But of course, we do need to break this major support level. If we don't break this major support level and we hold it, then there is that possibility that we could bounce off of this support once again and maybe come back up and test the $25,000 level. But yeah, right now,
Yeah.
again, like with the S&P 500, fundamentals are lining up with the technicals, and they're both bearish.
Yeah, I was just gonna like, I mean, it's almost a bit of like a joke at this stage of it. It's like,
Yeah,
25K, those were the days.
yeah.
Yeah,
It, it,
it's
it's what we would like to see, of course, but yeah, just it's not looking good. Fundamentals, as I said, aren't looking good, and the technicals, because we're still below the resistance at the bearish flag, we're still continuing to stay below that. Then
mhm.
this is just confirming that we are going to most likely come down to 12,000, and especially breaking this daily support. I think that's pretty bearish as well, because as we can see, if we look further back, looking all the way back here, we can see resistance on this downwards trending white line, resistance here as well, resistance here, and then we have this support level here. This is a textbook, almost textbook descending triangle. We would like to see less white space here, but still this is a descending triangle. And because we've had the break towards the downside, this is giving us lower price targets as well. Now, the price target for this is actually around $8,000, but I wouldn't expect that price to be hit. I do think we are going to find immense support at this level between $11,300 and $12,200 if we were to come down to that level, because as you can see, major resistance here, major resistance here, major resistance here as well. And when we did get the break towards the upside, we did actually use it as support as well. So for me, this sort of range here, this zone between 11,400 and 12,200 approximately, is going to be a major support level. And I wouldn't expect a candle break below that. If we were to come down to that, I would potentially expect a wick down, potentially to 10,000, but I wouldn't expect a candle break below that at all. So yeah,
Yeah.
just not looking good in general, really.
No, you're absolutely right. Absolutely right. Quick question, guys. Is there any, if you put it in the comments, is it this way? I don't know. Put it, the live chat. Put it in one of the ways. Um, I don't know which side it's on. But anyway, if there is anything that you want us to go through, can we have a quick look at Solana? Sorry, I was going to say, if there's anything that you want us to go through or even explain, um, put it in the comment section or in the live chat, either one. But we
Yeah,
can, yeah, we can have a look at a couple coins, and then I think what we want to do is obviously we'll do a little bit more technical analysis, and then maybe give a rough price prediction for the end of the year. I know you and I were discussing previously off screen what we think maybe could happen.
yeah.
Everything's very maybe this, maybe that.
Yeah, yeah, it would be good to explain that. So yeah, quickly looking at let's start off with Ethereum quickly, then have a look at Solana.
Yeah,
So Ethereum, I'm not really um, looking at Ethereum too much at the moment because we still do have that price target of dollars. We got the break towards the downside of this rising wedge. The target is still in play at the bottom, which is sat at around $1,010. That target is still in play. So I would be waiting for the price to come down for Ethereum for that. Because as I said, we did actually come up and test this major resistance level, but it didn't invalidate this rising wedge. We did have a smaller falling wedge, but that didn't play out. That did get invalidated, and we are still expecting the price for Ethereum to come down to around $1,000. Taking a look, let's have a quick look at Binance Coin. Binance is falling, a potential bull flag, but for me, I wouldn't expect this to break towards the downside. Obviously, if we did see the traditional markets and Bitcoin have a bigger correction, so we could potentially see BNB stay within this channel that it's in right now. We could potentially see this channel still be respected, potentially down to these lows, and then maybe get the break towards the upside. We wouldn't call it a bull flag then. We would just call it a descending triangle. But say it did break towards the upside, we could see maybe a little push towards the upside for BNB. Now, it's not certain if Bitcoin drops, not we are going to see the odd altcoin push towards the upside. BNB could be one of them, and so yeah, this could be something that potentially breaks towards the upside. But I wouldn't expect it to if we did see traditional and Bitcoin fall even more than it already has. Taking a quick look at Solana. Solana on the shorter, looking on the sort of shorter time frame, but this is the daily. But looking here, we are holding this support level at approximately $30. There is slight support there. With Solana, we did have this rising wedge like we did on Ethereum that broke towards the downside. The target for that was hit at around $32. So for Solana, we did hit that target. What we could potentially be seeing right here is potentially a shorter term double bottom W pattern right here. But as I said, if we do continue to see the traditional markets push down towards the downside and we see Bitcoin push towards the downside, then we will most likely see Solana push towards the downside as well. So I wouldn't expect Solana to pump if Bitcoin didn't. So the next major level that we actually are looking at for Solana is the $28.6 level. So if we break this $30 level, the likelihood of it is we are going to come down to the $28.5, $28.6 level. If we break that, which is that next sort of major level, as you can see the swing low from here, then we could see the price of Solana have a much bigger correction than it already has. And yeah, for me, investing into it long term, of course, it's a great buying opportunity now. But for me, I would just wait to see if we do get the traditional markets and the crypto market to push down a bit further. And if we did, then I would expect to see Solana actually have a bigger correction, and then I would be looking at a potential entry point for Solana at the lower prices. So looking here, what I'm potentially looking at is we could also be forming some sort of triangle pattern here if we take all these points together. As we can see here, we've got a resistance level up here, we've got our support level down here. We could be forming this sort of triangle pattern. Maybe we could have a push towards, if we continue to hold this support at $30, we could potentially have the retest of this resistance at around $40. But of course, if we see Bitcoin break towards the downside this week of this major support level here, then I would expect a pretty a pretty big reaction towards this as well, breaking this major level. And I would expect to see a big sell-off, which would bring the price down and would most likely bring the price down for Solana as well. So potentially getting a break towards the downside of this triangle pattern. And if we could be looking at much, much lower targets for Solana as well.
Yeah. There you go, guys. If you guys don't have any other coins, I think we'll kind of wrap this up here. But AJ, just to give people a little bit of insight, I know we were mentioning that it kind of depends on the Fed's rate hikes and stuff.
Yeah,
Um, but it seems as though, by the end of the year, I think we will have had a drop down to that, I'm going to say, between 15 and 10K region. I don't
yeah,
want to give an exact price as to what I think. I think we're definitely going to go down there. And as we get closer, obviously we'll be going live and we'll be trading it actively. So make sure that you actually sign up with either Bybit or Femex, which is, two of the trading accounts we use. You get up to $4,000 cash back when you deposit your fiat. So make sure that you do that, and you can join us on the journey. But I reckon we're probably going to have a drop down. We'll hover there very slightly. I don't think we're going to be down at those levels for very long, to be honest.
no,
Um,
neither do I.
and then and I think as inflation begins to get under control, basically the Fed are saying that CPI is going to drop by 3% by the end of the year, which is pretty crazy. I think it's like 3.1 is what they think it's going to drop. So obviously, at the moment it's like 8%, whatever. So what they're anticipating is next month is going to be 7, and then 6, and then 5. And so that I think could lead to a bit of an end of the year pump. And I'm not
Yeah,
going to say it's 30K or anything, but I think probably we'll reclaim 25 relatively quickly. But I think we're probably going to be stuck under those two actual resistance lines that you have here, AJ.
yeah,
Yeah, around about that 30K or so. And then I think we'll have probably quite slow growth in the early stage of next year. Um,
yeah,
but that's, personally, what I think we'll do. We will then have the end of there'll be no like major rate hikes again after that. So I think because there's no major rate hikes afterwards, none of these like, hey, 75 basis point hikes. I think then we will get a bit of slow growth. But at the end of the day, the economy is going to be so well in the US anyway. The
yeah.
economy is going to be in such a bad shape, and I think this, the whole recession thing will really set in. So I think we might have a bit of slow growth.
Yeah, and I know we're 40 days away from the next FOMC meeting, which is in November, if I'm right. Is it 40
Yes.
days? November, yeah. And the right now, what most of the investors are predicting is it a 75 basis point? Am I right on saying that?
Um, so next time is yes, a 75 basis point. Yeah.
Okay, yeah. So if we're going to see that as well, of course we've seen this negative reaction to this 75 basis point hike. We are most likely going to see another negative reaction towards that as well. If we haven't pushed down to 12,000 by then, that will most likely be what takes us down to 12,000. Then we can start talking about the next FOMC meeting, which would when's that? Is that December?
Yeah. Then after that, so after November 2nd, their next
Yeah,
one is December 14th.
December 14th. And if we do so in November, if we do get that 75 and we aren't already down at 12,000, then that will most likely push the price down to 12,000 potentially. Then in December, if we can start getting, the lower basis point hikes, so say 50, but at least anything below 75, say we get 50, then we can start looking at the price. And Bennett's explained this to me off camera as well, that we can start seeing the price push towards the upside again and have confidence that the Fed is going to get that inflation under control. So for me, it's not all bad getting that 75 basis, potentially getting that 75 basis points in November. Push the price down, gives us great buying opportunities, and then the Fed can do their thing to get inflation under control and have a 50 basis point hike, and then that will most likely push the market towards the upside, and we can start seeing the market push towards the upside because we know that the Fed are starting to get inflation under control.
Yeah, you're absolutely right, and I think what we will also be looking at is, again, it's these CPI prints, you know. So
Yeah,
obviously we had a CPI print before, and that then gave us a bit of almost direction as to, well, look, if CPI is now obviously, you know, crazy high, which is it was previously, you know, they didn't have the expectation on the nose, so it came in over expectations. Obviously, this is very bad, so that's why the Fed were like, right, well, we have to do a 75 basis point. So I think, just as you said here, AJ, you know, we're going to be watching, you know, how does CPI kind of come in? What's the inflation like? You know, at the moment we're just constantly on an upward trajectory. So it hasn't even started to peter off yet. But I think you're right there. You know, in November we might, or even possibly before, depending on the CPI. You know, we will have that crash, and then we'll begin to kind of recover. Maybe in like December, like you said. And obviously, we're moving from that 75 to that 50 basis point, which it's kind of easing up the market. And at the
yeah,
moment, we're just being squashed.
yeah.
So
And I
it's,
mean,
yeah,
for giving us good buying opportunities, it's really good. But yeah, if you got in a lot higher, so you got in at 40,000, you know, obviously it's gonna absolutely destroy your portfolio even more than it already is. But obviously, what you should be doing right now is dollar cost averaging. Obviously, that's not financial advice, but what I'm doing is dollar cost averaging, and I'm going to be dollar cost averaging all the way down to the bottom, making sure I've always got a cash reserve on the side, dollar cost averaging down. That is the best way to do it, because as Ben said, you know, we can't predict the bottom. It's not, it's never good to actually give an exact target of the bottom. But we can have a pretty good understanding of where the bottom vicinity could be. You know, even just looking at the technicals, as we can see, 12,000 is a major level. So if it were to come down to that, I don't think it would break below that. So I think that could be the bottom. But obviously, we might not make it all the way down to 12,000. We've got other things such as a CVDD that has never been broken before, and that is currently sat at around $15,500, if I'm correct. And that could hold us support because that's never been broken before. So, you know, it's not certain we're going to come down to 12,000, but if we were to come down to 12,000, I wouldn't expect to break below that. And if we did see a break below that, I think we would see a lot more pain. And yeah, that could potentially be the end of Bitcoin. I wouldn't.
yeah. I'll just summarize this here real quickly for you. Bitcoin's over.
But a break
Yeah.
below 12,000, and you know, we could even be talking about coming back down to 8,000 and then 5,000, and then it just gets messy from there, and then everyone loses confidence in it, apart from, you know, the people that really understand it. And yeah.
Everyone gives up on YouTube. It's just me and you still here holding down the fort.
Yeah. So yeah, I
No,
wouldn't expect it to break 12,000, that
no.
sort of
I
vicinity.
mean, I would say at worst, I could see a wick to 10. But like I
Yeah,
said in the video earlier, you know, having seen the data, and you and I have gone through this, AJ, you know, there's very much like loads of orders. So the order
yeah,
books for institutions are absolutely massive. And obviously, you know, the lower the price goes, the more the orders there are. So, you know, you end up at 10,000. You know, there's so much buying pressure that I'd be extremely surprised if we broke past 10, or, you know, definitely, I'd say, not going to say definitely, but I'm very confident we wouldn't break past 10. But I'd say a wick down into 12 and 10 is not crazy to think of.
no.
So, not
And that would give us that standard bear market pullback. So if we look at, so let me just bring up my screen quick. So if we look at the previous bear market, we had a pullback of around 84%. So if we took that from the high from the previous bull market, and we sort of had a look at an 84% pullback, that would bring us down to approximately 10,000. So a wick down to 10,000 is something very possible, because we do tend to see these over 80% corrections in the bear market. So this is just more confluence that is confirming to me that 12,000 is very, very likely right now. I know there's a
yeah, and
question.
I'm
I don't know if you wanted to answer that.
Yeah. I'm about to.
Do,
Um,
do you think BTC
uh,
will sense Fed pivots earlier than other asset classes?
one second. I'm trying to do so. Basically, my answer is no. Um, I don't think it will sense it faster because Bitcoin's very reactionary, and we basically have to think about like, oh, this is the worst. This
I
is
think it would follow the traditional markets. I don't
yeah,
think it would lead. If you know, we see the traditional markets react off what the Fed says, and the crypto market normally just follows the traditional market, whatever the traditional market does, because traditional markets class as a risky asset. Bitcoin is also a risky asset, or you know, a lot of people class it as a risky asset, and yeah, for me it would be the traditional market that leads it, and then the crypto market follows behind the traditional market.
yeah, you're absolutely right. So just to show you from right, I'm gonna okay, share my screen here. So just to kind of mention, the reason why I wanted to show you this is the price of Bitcoin, obviously down here, and this is the 10-year Treasury yield. And I think whatever happens with regards to the Fed, the first things that institutional investors do is they snap up bonds. You know, I know it's horrible, like we don't like them. The yield on a 10-year Treasury is worthless pretty much, but it's an extremely safe hedge. And so, what a lot of institutional investors do is they kind of look at bond yields, etc. Now, I just want to show the massive inversion. So it's such an inverse correlation, you know, even since the beginning of the year, having seen the price of Bitcoin fall, but the 10-year treasury yield increase. And even you can see this kind of here, you know, where we see have like a bit of a correction to the downside, and then but you know, Bitcoin's price is moving to the upside. And so, you know, it's you know, it's a hard thing to say, oh, this is an exact science, but I do
Yeah,
think that obviously Bitcoin and 10-year treasury yield, they are inverted or inversely correlated. So I think it would very much be because institutional investors buy bonds first. As soon as we see the bond market move, that would move the stock market, and then that would move the crypto market because
yeah,
Bitcoin just basically it's considered a risky asset. And obviously, as an investor, the first thing you do is, right, well, if there's something that the Fed is doing, let me sort out my portfolio. And typically, you'll start with your biggest holdings, which in today's period, your biggest holding is absolutely not going to be a risky asset, just because of you can see here. So this is a from the beginning. The treasury yield has gone up by 126%, and the risky asset Bitcoin has gone down by 69%. So obviously they're focused on the biggest part of the portfolio, which is going to be something like bonds. So Bitcoin will react to the bonds.
yeah. And just adding on to that, if I bring my screen up quick, looking at the bonds chart, we can see that we do have this massive rising channel that is forming, and this really big uptrend, and this soon enough would break towards the downside. And if this were to break towards the downside, as Ben showed, the bonds and Bitcoin is it's inverse. So if we were to see a big break towards the downside of this bonds, and then we do see that big correction, then we will most likely see the crypto market finally have that push towards the upside. But if we do continue to see these bonds rise up in this rising wedge, not rising wedge, sorry, rising channel, ascending channel, then we are most likely going to see Bitcoin continue to push towards the downside. So we can look at this chart as well, and we can keep a very close eye on it and wait to see if we can get this break towards the downside. When we do get that break towards the downside, that is just another indicator to us that signals that Bitcoin could finally have its push towards the upside, which could then potentially lead into that bull market as well if we do continue to see those bonds fall as well.
Yeah, absolutely. But like I said, and as you pointed out here, AJ, we're just not in that kind of economic environment at the moment in order to be, shifting away from something safe. Especially, inflation is still getting out of control. We still have to consider that, like, there actually is, and let me just bring this up. There actually is quite a weird thing that we need to look at. So currently, the Fed still can't control inflation, but their interest rate is at 3.25. Now they're looking to get to around 4.5 or so. So there is still more to do, and they're
Yeah,
looking, basically it's going to be the Fed fund rate by the end of the year. Okay, so there's still a lot to do, but if you think about this, they, along with Canada, have the highest rate. I mean, apart from like Russia, but that's very different. Oh, and also India, but these don't really contribute as much as the likes of these central banks. So we kind of take this as more of the important ones, should we say?
yeah,
But they're at 3.25. European Central Bank, the ECB, is only at 1.25, and Bank of England is only at 2.25. So it seems as though inflation is getting a lot worse in the US, but they don't have a war on their doorstep, and their interest rates are lower. So you have to question then, are we going to have the likes of the ECB, i.e., Europe and the UK, and also Switzerland, go through this period of inflation for a much longer period of time, and therefore, they end up either having to do something ridiculous that just crashes all the markets, or they end up in a recession and then have to stay there for a while. So then if we're worried about all of Europe being in a massive recession, and also everyone's worried about what's going on with China and also Russia, etc. So it does now become like, although we were looking, oh, the Fed are so bad, blah blah blah, they're actually doing relatively well in trying to like control inflation, but we're still in quite a bad period for a
yeah.
number of months here. And I think
They're
that kind
doing a
of
lot
that
better
rounds,
job than Europe is.
yeah, I think that kind of rounds it up exactly as to what we've been saying for the whole day is, um, it's just that we are in a bad economical environment,
Yeah.
um, which I think some people don't necessarily maybe see or want to see, because Bitcoin to 100K.
Yeah.
It's it's a bit of a just like a standard thing.
Yeah, yeah, and obviously we want to see that, but right now it's just not the time for it. Right now is the time to be accumulating, and then in the future, maybe a year, maybe 2 years, who knows how long it's going to take.
Oh mate,
But sorry.
don't say that. 2 years. Call me
But
when
I mean,
when
it's the
Bitcoin.
reality of it, isn't it?
Yeah, I know. It
It's
is.
going
It's
to
a
be a
hard.
slow growth back up to that all the time high. We're going to have a lot of corrections during that time as well. Obviously, it doesn't go straight up. We are going to see the price push up, and then we're going to have the price come down, and then everyone's going to start talking about Bitcoin being dead again. And then we get the push towards the upside, and then we'll potentially have another push towards the downside. Everyone's talking about, oh, the Bitcoin's dead again, and then we'll have another push towards the upside. That's how it always goes. So, yeah, it will be a
Yeah.
slow growth.
I'm gonna finish this off here, AJ, with one very important question. Firstly, Dugesh, thank you for the appreciation. Very grateful. But quick question, AJ.
Yep.
When Lambo?
When Lambo,
When Lambo? That's the only thing I need to know. When Lambo?
uh,
Do we have to wait for 2 years?
I wouldn't say we have to wait 10 years for that. I reckon maybe 2 years, 3 years until we could
3 years,
see
3 years.
100K. I would maybe push it out to 3 years just to be safe. But
Yeah, there you go. Well, you
uh,
heard it here first, guys.
just want to answer Esteban's question quickly. What positions are you in today? As of right now, I am in no positions at all because just quickly showing you this chart here, we saw lots and lots of volatility yesterday. I was potentially going to bring a short to you guys which it played out nicely, but for me, the confirmations weren't there. So I was looking at this golden pocket here, and then the point of control, they were lining up nicely, and then I was going to open up a short position here, potentially all the way down to this, but then we saw when the Fed were talking, I did see this push towards the upside. So I thought, no, I'm going to step away. I am not going to trade this because potentially we could see the price push up. And we saw the price push up, and we saw the price actually break towards the upside of this golden pocket, which if it did normally and the Fed meeting wasn't going on, then I wouldn't trade this, because if we broke towards the upside, the likelihood of it is we would most likely come back down and test it as support and then get the continuation towards the upside. So I said, no, I'm not trading this because of the Fed meeting. We are going to see a lot of volatility. And yeah, obviously, if we did short there, it would have been a nice trade. But for me, because of the Fed meeting going on, we didn't know what was going to happen. We didn't know how the market would have reacted. We sort of knew that the market was most likely going to dump if we saw a 75 basis point 75 basis points, but we have had 75 basis points back in July, and we did see the price pump. So I just looked at this chart and I thought, no, it is silly to open up any trade during that time. So yeah, I did just walk away and not trade it and not bring it to you. So right now I am not in a trade, but I will bring you a trade as soon as I can see one.
Yeah, it's always the best thing to do, isn't it? If you're unsure, like, you don't need to be in the markets. Just take yourself
Exactly.
out.
I was unsure at that time, and I thought, the best thing to do is just step away from it, and not trade it.
Yeah, there you go. All right, guys, thank you very much. Obviously, appreciate everybody for joining. Make sure that you like the video if you want to see more of this content. We like delivering it, but it's always good to see when you guys, if you like it, or drop a comment on anything you want us to implement, whether it's technical analysis on separate coins or just a deep dive into one project. Happy to do it.
Yeah. Thank you very much for watching, guys. We'll see you in the next video, and make sure you smash that like button.
Yes. See you later.